I want you to fundamentally forget everything you think you know about the entry requirements for building significant lasting wealth. The common lie, perpetuated by financial gurus obsessed with quick, high-income schemes, is that you absolutely need massive starting capital, six-figure starting bonuses, or a sudden inheritance to even initiate the compounding process. That deeply ingrained belief is a self-sabotaging myth designed to keep you passive, waiting indefinitely for a non-existent windfall to drop into your lap. The ruthless mathematical truth is that the single biggest, most controllable variable in your future net worth is not the size of your initial capital. It is the unwavering consistency of your smallest, most accessible, and most repeatable monthly contributions. We are talking specifically about the sheer exponential power generated by deploying just $100 per month, the exact money you are currently and tragically wasting on unnecessary, temporary consumption like daily gourmet coffee or marginal comfort upgrades. My name is Corbin, and this is Corbin Wealth. We've mastered the defense against structural issues like debt and inflation. Today, we dive into the core engine of aggressive wealth accumulation, the exponential physics of small, consistent inputs. We are exposing the small money lie and showing you the undeniable math that transforms your trivial $100 contribution into a six-figure retirement asset. The trap, the illusion of insignificance. The primary psychological barrier preventing millions from starting is the illusion of insignificance. This is your brain sabotaging your long-term future. Your brain, hardwired for immediate large rewards, actively tells you that $100, or the $5 daily sacrifice, is too small to matter to the vastness of the market. It convinces you that it's just 2 social dinners out, or the marginal cost of a slightly nicer coffee every single day. This psychological dismissal, this fundamental failure of long-term temporal reasoning, is the single most effective defense mechanism of poverty and stagnation, keeping you in the consumption loop. But we must confront the brutal opportunity cost mathematics of this daily dismissal. That seemingly harmless $5 daily coffee, the insidious coffee tax that you constantly pay, totals $1,825 per year in wasted, non-productive capital that could have been working for you. Now imagine ruthlessly redirecting that wasted $1,825 annually into a low-cost index fund, invested consistently at a conservative 8% average market return for a full 30-year career. That seemingly insignificant daily habit would mathematically transform into a portfolio worth approximately $225,000. Your behavioral failure? The dismissal of $5 today costs your future self $250,000 in unearned, compounded wealth. The true enemy is not market volatility. It is your small, easily justified, daily consumption decision. The engine, the exponential physics of small input. The physics of the compound effect are non-linear and relentlessly unforgiving. The magic is not found in the initial size of the capital. It is solely vested in the unlimited time horizon your returns have to work, and the structural necessity of automatically reinvesting every single dividend and gain. Let's return to the core figure, consistently deploying $100 per month, totaling $1,200 per year. If you sustain this minimal effort for just the first 10 years at that conservative 8% return, you will have contributed $12,000 of your own physical labor. But your total balance will be nearly $18,000. Here's the critical psychological shift. You earned $6,000 purely from mathematics and market physics, without lifting an extra finger or negotiating a raise. You have successfully hired your first tireless financial employee, and the only salary he demands is your unwavering discipline. This initial period, where the market contributes 50% of your gains, is the proof of concept that makes the next phase possible. Now, observe the pivotal transition to the coveted six-figure status. Continue that same tiny, easily manageable $100 contribution for 25 years. The effort remains the same. The low input is constant. Your total physical contribution is a manageable $30,000. Your total portfolio value? Approximately $103,000. The compound engine has officially reached critical mass, generating more than $70,000 purely from mathematics and the infinite resource of time, not your finite labor. This acceleration phase is the only proven, reliable path to true financial independence that doesn't rely on luck or the constant stress of chasing a massive salary. The ruthless discipline, consistency over capital. The actual $100 wealth myth is the structural belief that the challenge is monetary. The truth, which the financial elite guard carefully, is that the challenge is entirely behavioral and psychological. Consistency is the single most important, non-negotiable component of compound growth, often mathematically outweighing initial capital. The person who relentlessly invests $100 every month for 25 years will mathematically and structurally crush the person who invests $20,000 once and never touches it again, simply due to the superior infinite power of time and the consistent reignition of the compounding engine. This discipline creates the momentum multiplier. It forces you to ruthlessly eliminate the crippling luxury tax of consumption. Every $5 spent on a momentary indulgence, that premium coffee, that impulse gadget, is a double loss. The $5 itself, plus the potential $50 or $100 in compounded returns. That dollar would have generated over the next 2 decades. Your mission is to treat that $100 monthly contribution as non-negotiable. It is a sacred, structural debt owed to your future self, paid in advance, regardless of short-term financial discomfort. This is the difference between being an investor and being a hopeful consumer. The final challenge, the illusion of high returns. The final and most subtle challenge is psychological distraction, the craving for excitement. Many people fail the compound test because they spend all their energy looking for the next 1,000% moonshot, chasing speculative returns, instead of executing the simple, repeatable 8% index strategy. The steady index funds are boring, and the daily consistency is tedious. But the physics are infallible, and the math does not reward gambling or excitement. Your focus must shift completely and permanently from chasing the volatile return to ensuring the relentless input. Your primary job is not investment research. It is flawless, systematic behavioral execution. Every $100 you deploy starts the compound timer and permanently shifts the burden of wealth creation from your limited time and finite labor to the unlimited, exponential power of mathematics and time, working day and night on your behalf. The $100 wealth myth isn't really about needing a massive amount of money. It's about transforming how you think about consumption, commitment, and long-term value. True wealth doesn't start with abundance. It starts with awareness, the realization that consistent, disciplined, and intentional actions compound quietly over time into something far more powerful than any one-time splurge or fleeting luxury. Every dollar you choose not to waste becomes a silent builder of freedom, security, and options. Stop funding temporary comfort and start creating a system that works for you while you sleep assets, habits, and principles that multiply quietly in the background. The real edge isn't access or opportunity. It's perspective and patience. The power to change your financial reality is already in your pocket. All it takes is the discipline to deploy it with consistency, clarity, and conviction.